All right. I think we're live now. Yes, we're live. Welcome, everybody, to the Traveling Investor Show. I'm Nitzan Mosery, the Traveling Investor. And today, what we're going to do is have, we're going to speak with a couple of people who have spent their careers. I'm just trying to figure out this thing here, but people who have spent their real estate careers raising capital from all over. And we've got people, hopefully everybody will come in. Let me see, Marjeanne, you're muted, so you might want to unmute yourself. Let's see. Okay, they chose to mute themselves. So if you want to unmute yourself and put your video on, that would be fantastic. So, a lot of my coaching clients, a lot of people that I meet at these networking events, they're always asking the same question, right? They're always asking the same question. How do you raise capital? And the most amazing thing about real estate is that you can come from anywhere in the world. You can come from any background in the world, and you can get into real estate and you can go out and find properties. You can underwrite properties, you can analyze them, and you can go out and raise capital as a newbie. So what I did is I went out to the people that I knew, that I met, that had been raising capital and from all different backgrounds, and I brought them here today so that we can ask questions from these amazing people, okay, and figure out how they raised money. So first of all, I want to welcome Ellie Perlman. Ellie, how are you? Thanks for being here.
Absolutely. I'm doing well. How are you?
I'm
Really
doing
happy to be here.
fantastic. Yeah, I'm doing fantastic. It's a Wednesday afternoon, and I don't know if you guys can tell, I'm in the woods right now. It's kind of cold. I've got my sweater on. I got a long sleeve shirt underneath as well. I got jeans and shoes. My body's freaking out right now because I'm used to wearing flip-flops. You're in California, right?
Yes, I'm in Santa Monica. So I'm actually about 10, 14 blocks from the water. It's a beautiful sunny day, which makes it hard to stay at home. So maybe I'll go for a walk later.
There you
But
go.
yeah, hey, I feel your pain. I know I spent 2 years in Cambridge, Massachusetts, and it was cold.
Mm-hmm. Awesome. Awesome. And we also have here Mike Flaherty. Michael Flaherty, how are you, my friend?
Son, how are you doing, my friend?
I'm doing fantastic. I see you shaved for me today.
I try to clean up a little bit for you.
That's awesome, man. That's awesome. And are you in Cali now, or where are you?
I'm in Northern California.
Beautiful.
Sunny and beautiful. I used to live at the beach in LA as well. So, in Nissan, where are you? Where are you right now exactly?
I am. Where am I? Right outside of, I would say, about an hour and a half to 2 hours northwest of Charlotte, in the mountains near the Blue Ridge and whatnot. So, from Saturday till Tuesday, I was at my glamping marina in Lake Wiley, which is outside of Charlotte. We got little tiny cabins, little tiny homes, great for social distancing. You got your own kitchen, you got the TV, there's a little beach, the lake, you can paddleboard, you can kayak, you can rent the boat. It was awesome. So we had some sunny days there, but then it started to rain and we moved further north and it's just gotten colder. And the reason why I'm not inside right now is because we've got my wife, her sister, my daughters. They're in the jacuzzi over there outside, and we've got about 8 more people in the house as well. So we're social distancing together. That's the way it is, right? And we also have Marjeanne Fields on the line, and for some reason Marjeanne can't seem to get her camera to work. But Marjeanne, can you hear us?
I can hear you. Can you hear me?
Absolutely. Awesome. Thanks for being on the call as well. Where are you calling in from?
I'm calling from Arizona, and it's super warm here. I wouldn't dream of wearing a sweater right now. It's like 90 degrees outside.
Awesome. All right. So I know you guys have a lot of things going on today, Mike. I know you've got several refinances, and everybody's busy. So let's get this going. We got a couple of people here. We got Edwin. Hey, everyone. Great topic of discussion as we prepare for the great opportunities heading our way. And Caesar says, good afternoon to all. So why don't we go in a row and quickly, like 30 seconds, where you're from originally, what your background is, and, you could either say how many units you have, how much money you've raised total, and so forth. So Ellie, why don't we start with you?
Yeah, absolutely. So I'm originally from Israel. I think I've been here in the States for about 5.5 years now. And Lula Capital is my company, and we own about 2,000 units all across, the U.S., but mainly Texas, Florida, and Georgia.
Awesome. And when did you start in multifamily?
Actively buying about 3 years ago, and later on, I'm happy to share my story of how I approached my first capital raise, all the tactics that I've used, because it's really kind of the chicken and the egg. Because people, investors, they want to invest with someone with experience, but how do you get experience if you don't raise money to have your first deal? So there are ways to kind of go about it, and I can, I'm happy to share what I've done to kind of get out of that weird situation.
Awesome. And what did you do before real estate?
So before that, I was always in real estate, actually, for over a decade now. I started my professional career as a commercial real estate lawyer back in Israel. And that's how I kind of saw what I was missing, because I wanted to be my clients. I wanted to be the one who's buying properties and improving them, and not just the person who's negotiating with the banks or negotiating a contract in general. And then after that, I transitioned to property management, and now I came full circle, and I'm syndicating deals, and basically that's what I do.
Awesome. Excellent. Thank you. Mike Flaherty, talk to us. Tell us a little bit about your background, what you did before, how you got into multifamily, and either how many units you have or how much money you've raised.
I definitely feel less cool without the nice big microphone in front of me, but I feel a little left out. But I'll try to do my best here. I'm originally from the Washington D.C. area, Silver Spring, Maryland. Have lived east to west. Maryland, Philadelphia, New York. I've been in California some 20 plus years now. Civil engineering background from Villanova. I have an MBA from University of Southern California. And I used to be a real estate developer prior recession, 2008.
Mm-hmm.
And, everything got turned upside down, as it did for many of us. And I wanted to create a sustainable real estate business model, if there is such a thing. And at the time, we jumped 100% into apartments. So since 2009, myself and my team, we've bought and sold over 6,000 units. We currently have around 5,500 units in the portfolio, about 600 million assets under management at the moment, and it really extends from west to east, Seattle, California, Arizona, through the Midwest, and into Virginia.
Wow.
We typically, all of our capital is raised from private individuals, and we'll raise usually 30 to 50 million a year. And usually we'll close anywhere from 3 to 5, 3 to 6 deals a year.
Wow, it's amazing. Awesome. Thank you so much. And thanks for being here. Dr. Vikram Raya, what's happening, my friend?
How are you, Ditsan? Great to
I'm doing well. I'm doing well. Thanks for being on the show. I'm sure you're super busy, and I appreciate your time.
Absolutely. Yeah. Hi, guys. Good to see you guys again.
So,
hey, Doc.
Doc, tell us, doctor, real estate, obviously we know your background is in the medical field. So tell us a quick blurb, how many units, where you're from, money raised, and how you kind of got started in multifamily.
Yeah, absolutely. So we started in real estate in 2012. It's sort of a side hustle from my medical profession. So I'm a cardiologist by training, my background, and I was practicing in DC, but as soon as I started practicing, I was like, hey, what do I do on the side? I can't just be a doctor. That doesn't work. Right? And so I started learning about real estate. I started learning about single family homes. And then my father and I in Atlanta. We ended up starting acquiring single-family homes during that 2012, run up on the real estate, where it was a really great opportunity to start buying things at discounts. And we chose Atlanta because that's sort of my backyard. I grew up there. I went to Emory for my undergrad, and we knew the Atlanta market very well. And so we started buying single-family homes. We built up a portfolio of about 30 homes, and then we did a commercial strip mall, and we ended up selling all those for profit. But then I wanted to go to the next level, and met some mentors, some of the mentors that we all know, Dave Lindahl and some of the others, and we really decided, hey, multifamily is the next step. And I picked up a really good partner in Ravi Gupta, and then the two of us together really formed Viking Capital, and we just started acquiring multifamily transactions. And so now we have a portfolio of 2,600 units. We've raised about $40 million of private money, and we've had 5 successful exits, and we look forward to keep expanding. And I think this COVID opportunity, Nissan, will really provide us some really steals in the next couple of quarters, maybe 2021, 2022.
Awesome. Thank you, Doctor. Marjeanne, are you there? Marjeanne, can you hear us? Marjeanne's having a little technical difficulty, so when she's back on, Marjeanne, just let me know. Okay, so let's get started. All right, so we all obviously come from different backgrounds, right? I came, my father started me out in real estate, always told me, that the most, the richest man or the richest person in the world is someone who owns property free and clear. And that's why we always want to own property, and we can do so many things with it, right? We can build on it, we can sell it, finance it, we can rent it out, all those things. And then I went traveling for many, many years. I worked for Lehman Brothers in the 90s, before the crash happened. I was in the first World Trade Center bombing and whatnot, and very lucky to get out of that alive. And then I traveled the world for many years. And then when I came back to the US, I decided to get back into multifamily or into real estate again. And I was fixing and flipping homes, saw the end of that, wanted to transition into multifamily because I knew that cash flow, passive cash flow, was the lifestyle that I wanted to live. And I'm sure everyone on the panel here has that same concept, right? We're buying multifamilies to gain that passive cash flow so we can have that lifestyle that we want, that freedom. But when we're all getting started, there's one thing, there's one aspect that kind of eludes everybody. And everybody keeps asking us, what's the secret sauce? What's that one word that you tell an investor that will open up their checkbook and have them, write up a check for 50, 100,000, whatever it is. So, I wanted to bring people from different backgrounds as we have here so that everybody can have a chance to share with us their ways and what they use, actual maybe verbiage, techniques, ideas, and so forth. So who wants to start? Who wants to start sharing, your first deal? Maybe take us through your first deal, what it was like, your angst, your pains, your anxieties. What was it that you were, how did you go about raising money? Let's let the ladies talk first. Why don't we do that?
Sure. So I can tell you that when it comes to the first deal that I've done, and I keep telling that to my students as well, you got to start raising money a lot earlier than your first deal. So once you have a deal, you have about 60, maybe to 90 days to close. It's not enough time to start reaching out to people who have no idea that this is what you do now, because nobody is born a syndicator, and everyone is kind of transitioning from another profession. And so before my first deal, about, I would say 6 to 7 months before I had the first deal, I started reaching out to people that I knew in my network. And I kind of wrote down the names of all the people that I thought had money or would be interested in investing in real estate. And I started reaching out, and I said, hey, this is what I do today. I'm syndicating deals and I'm buying multifamily properties. And to my surprise, some of those people didn't have the money to invest, and some of them had the money but were not interested in investing. And so doing my homework early on really helped me focus on the people that were more likely to invest. And that's how I saved a lot of time. So that was kind of the prep work that I've done prior to having the first deal. And then in addition, when I started talking with investors, I realized that many of them had no idea what a syndication was, how it worked. And that gave me, when I had time before my first deal to really educate investors. Basically, I created it was kind of a 7 or 8 page presentation, and I ran the numbers on a fictitious deal, and I said, this is not a real deal, but once I have a deal, this is how it's going to look like. And basically that gave them the opportunity to learn about multifamily syndication. And they asked me a lot of questions. And when you do that, as I said, you're kind of screening those who are not going to be relevant. And B, people need time to adjust to the new thing that you're doing. If you go to someone and say, hey, I have a deal, do you want in? And your entire life you did something else, most likely they're not going to jump in and invest with you, because people need time to digest, to adjust, to the new idea that this is what you do now.
Right. Okay. So you're telling people, right, you got to start before you have a deal, right? Because Mike, how many of us have heard, or all you guys, right? How many of us have always heard, if you find a great deal, the money will be there, right? And how many of us found a deal and then we looked left, we looked right, and we're like, okay, where's the money, right? They told me when I find a great deal, the money's going to be there, right? So Mike, share with us real quick, what was kind of your first deal and going out there?
Yeah, and it's funny. I'm a believer in that. If you find a good enough deal, you can always find the money. But to Ellie's point, there's some legwork you have to do first, and it certainly takes some time. And I took some notes here. I mean, one, you should start small. Two, it's a relationship-based business, so you need to get your name out there. You need to get in front of people. 9 out of 10 times, the first time you present an opportunity to an investor, they're going to say no, especially if you haven't spoken to them before. Good communication, good education is really important. It's funny, Ellie, I used to do the same thing. My first deal package was on a deal that we just didn't get. It wasn't a fictitious deal. I would call it a sample deal, right? And it gave potential prospective investors a feel for what they were going to invest in over the next 6 months, over the next year. When you had your next deal, had pictures that people could help visualize. It had the returns that they potentially would be receiving. Another easy way to raise capital is raise it on a good looking deal. If you're going to put a real deal or a potential deal or a fictitious deal in front of someone, and you're in New York and LA and you're investing in a deal in Oklahoma City, you want to project a smart investment, conservative investment. You don't want it to look like a shack that's falling down. So that presentation is really important, but it takes time. It's one chunk at a time. People always say, hey, how'd you buy all these deals? And the reality of it is it's one deal per year. And then it becomes 2 deals, and then it becomes 3 deals. It's one investor at a time. You make that investor happy. You create a reputation of trust, and you create a track record. And that happy investor refers you to 2 others, who refers you to 3 others. And then suddenly you have more investors than you know what to do with. But certainly it takes time. My first deal was a $5 million deal in Odessa, Texas. Another relationship of mine actually had it under contract. He had never raised capital before. He couldn't get it all done on his own. I stepped in and helped him raise capital. Talk about stress at the last minute. We were about to go hard with a couple $100,000. We found out that the money that he had raised really didn't happen. I think as an example, he said, hey, I'll raise $1 million. I have $1 million. We're about to go hard. He came back and said, I only have 200,000. So we had to scramble very quickly within a week's time. And I was fortunate enough to have another relationship that I knew within real estate, but not within apartments, that stepped in and helped raise that last 800,000. So sometimes it takes time. And sometimes it takes the right people or the right relationship to get started. Partner with other groups that have a deal, and partner with other groups that might be able to help you raise capital or might have better access to investors sooner than you might initially have.
Awesome. So yeah, that's a lot of good information. I was taking notes as well. Dr. Vik Raya. So tell us, right? You started as a doctor, right? As a cardiologist, right? So when people were looking at you going, okay, we understand if I need some heart work or if I got to replace my heart, I'm coming to you. But multifamily, I mean, you don't know how to switch out a boiler, right? So what was that process for you to start raising capital?
So, as Mike mentioned and Ellie was mentioning, I mean, one, it's a process. Two, it's about education. So I would say the first 30-day action plan for all those listening who need to raise capital but not sure how to do it. First thing is you have to find a deal. And I would say if you don't have your own deal, then maybe JV with somebody. But bringing a live deal is very helpful because then you can actually start testing the waters. And you want to really learn the lingo. As a doctor, there's diastolic dysfunction, systolic dysfunction, pacemakers, arrhythmias, right? I have a lingo. Well, there's a lingo in real estate, right? It's cap rates. It's cash on cash return. What's the DSCR, the debt service coverage ratio? When you speak in this lingo, it elevates you above all the people you're talking to, and you become sort of a micro celebrity, a micro expert in that field. Then they're like, oh man, this guy knows what he's talking about. The next is FAQs, right? You want to have like the frequently answered questions like, okay, why multifamily? What's the advantage? Why not hotels or why not retail? And we already know the answer to those questions right now. Those are not where you want to be. Multifamily is one of the spaces you want to be in. But, answering that there's tax advantages to investing in real estate. Did you know that? Did you know that, you can depreciate things? Did you know that you'll be taxed at a lower tax rate? You get cash flow from the deal and you get an equity kick at the end. How much are you earning from your stocks right now? Okay, and then you sort of compare and contrast. You also want to ask them, hey, look, what kind of returns are you looking for? And are you able to achieve those on your current strategies? By you identifying their current pain and realizing, hey, look, they're not going to be able to retire at their time frame based on their current strategies. And if you give them another viable option that's actually more conservative, but it's more lucrative, it'll turn light bulbs on. And I think as Mike was mentioning, you're not going to win them over the first round, right? But you want to form this network. And so I would say there's 3 levels of investors, right? There's your warm network. These are your friends and family. This is what you want to start cultivating. You want to let people know what you do. Like I'm sure Ellie was trying to let people know, look, I'm not just on the real estate legal side. Now I'm actually on the investment side. I'm trying to show people, hey, I actually am taking full ownership of the full real estate lifecycle or the transaction. And so then they're like, okay, they start hearing about things. They start learning about you. They may miss out on the first deal because they're not sure about you yet, but then they see it closes pretty quickly. They're like, oh man, maybe I missed out. I need to keep up with her and see what happens on that deal. And then by informing people what you do, constant checkpoints. So, and that's what Mike was saying. You want to communicate with these people. You want to give them, hey, look, this is what we closed at. We're doing well. This is we're about to hire, acquire our second transaction or third transaction. And then again, baby steps, right? You want to do your first raise, maybe it's 500K or 200K or 500, or maybe it's 700K. Our first raise was only 750K. But our biggest raise, I mean, I think we've raised on one deal, we had to raise about 20 million. So, you start small and then it gives you confidence first. And then, as I mentioned, though, you got the warm network, then you got the cold network, right? These are like friends of friends. These are associates. These are people that are being referred to you. Mm-hmm. And then there's a network and associations. This is like going to the family office meeting called the Wilson Family Offices in Miami. This is like Rotary Club International. This is like, all these, there's something called the Tower Club here in DC where it's like, executives and CEOs and sort of movers and shakers. And so I just hang out there and show up and talk, and I get to meet people, and then they want to know more about what I do. And then boom, that's where it is. So when people say, hey, what do? You should have your elevator pitch ready so then you attract interest for them to move forward with you. Okay. And so those my main thoughts.
Awesome. That's a lot. And I've been taking notes, and travelers out there listening, I hope you've been taking notes as well. Marjeanne, I know we can't see you, but I think we can hear you.
Can you hear me now?
Yes, ma'am. Awesome. Welcome.
Awesome. So I'm kind of more the new kid on the block, and we just really got started only a couple of years ago. I was working with my husband in his general contracting business, and we started doing fix and flips because when you're a GC, it kind of just makes sense, right? But we realized fairly quickly how active form of income that is, and we basically traded one job for another. So we got into multifamily. And anybody looking to get started in multifamily, I'm going to tell you right now, you have absolutely no credibility, and the investors are not going to invest with you unless you can build that credibility. So one of the things that we did is we got ourselves a really, really strong team to work with, right? So it wasn't just me coming to the investor saying, hey, invest in me. I don't know what I'm doing, but please give me money. It was, here's my team of people who have been doing this for 10 plus years. You know, we had an appraiser on staff. We had a home inspector. My husband was a GC. So we had all these people who knew what they were doing. So that way, when we come to the investors, it's, hey, you know, you don't have to even trust me. You just have to trust my team of people. And here's their track record, right?
Awesome. Right.
The other thing I would say is anytime that you're going out there, if you're going to groups, if you're walking properties, anything that you're doing, put it online. And make sure that your investors are friends with you on Facebook, LinkedIn, Instagram, all that fun stuff. Because again, you're trying to build that credibility. The more they see you active in the marketplace, the more they see you walking properties, talking to other people. It's the FOMO, right? The fear of missing out. Right. So not only are you building credibility, but then they're going, oh my gosh, if I don't start investing now, I'm going to miss out on these opportunities.
That's great. That's great.
The last
FOMO.
thing I would say is low-hanging fruit. So when you're going to your educational seminars and learning what you're doing, make sure you're talking to a lot of people. Talk to every single person that you can there, because a lot of those people really do want to invest. And they're either looking for JV partners or they're looking for passive opportunities. And so you want to really capture on that low-hanging fruit inside those educational groups.
Wow, that's awesome. Guys, great information. Okay, so so let's go a little round robin now, and let's talk about, you know, what I've been hearing mainly from everybody is, you know, relationship, right? How long does it take to build relationships? Because, you know, like Marjeanne said, like all of you said, you know, we're getting involved. We don't have any credibility. No one knows us. So how do you build relationships quickly? And can you build relationships quickly, you know, that, you know, people will invest with you? Feel free to chime in, anyone.
I think those relationships start with giving some value.
Mm-hmm.
You know, it could be sharing articles on social media. It could be when you meet someone, you're prepared with some articles or some data that support investing in multifamily. One thing, whenever I went to a networking event, I always brought an investment summary of a deal that I was raising capital for, a deal I had already closed, or a deal we were looking at. And I would always lay that on the desk next to me or carry it around with me. And so people were always interested. But, you know, I think it starts with a couple different touches. To meet someone for the first time and tell them that you want them to invest with you, I think is very unrealistic, unless they know something about you initially, or someone they know has said good things about you and what you do. So if you don't have that, you know, start by giving them something. Start by following up with them with an email with, again, some data, some documents, some articles that support, you know, why, as Dr. Vic said, why multifamily, why now? And give them some example of some deals you're looking at. And if that engages their interest, then there's a follow-up call, or, you know, or a cup of coffee face to face. And then if they continue to be engaged, at that point, you've met them 2 or 3 times. They know what you do. They know why you do it. They know the types of returns you're going to be giving them. And at that point in time, when you actually have a real opportunity, you've already educated them. And they're more inclined to show interest, and they're more inclined to invest off the bat. Right. It's very rare you meet in LA. It happens, right? You meet someone for a cup of coffee, and they commit to investing $250,000. it happens. It's very, very rare. It starts with creating, as I said, a reputation of trust, education, and track record. And that track record doesn't always mean that, hey, I've closed 20 deals or I just raised $5 million for a deal. That can be a track record of credibility with just simply educating people on what you're doing, where you're doing it, and why you're doing it.
All right. Awesome. Thank you. We have a question here from Edwin. Suggested reading or sources for getting educated in syndication. What books have you guys read that has?
I will say that syndicationattorneys.com has a ton of free info on there, and here's a little plug for her. But she is a syndication attorney, but I really love the amount of information that she puts out there. Also, Mauricio Raoul, if you follow him on Facebook, he's pumping out a ton of information as well. So I'm sorry that those aren't necessarily books, but you can definitely watch the videos, look at the articles, way more information than just a book. That's how we really learned very quickly.
Awesome. Thank you, Marjeanne. I think the Dr. Vic said it was the Tower Club in DC, right? Because they're asking for that club in Miami. I think it was in DC, correct?
Yeah, and there's it's part of that Club Core network, CORP network, and so
okay.
There are locations all over the country, but that's really where like sort of the movers and shakers hang out. So you want to be where the movers and shakers hang out.
Right, absolutely. So Ellie, let's talk to you for a second because you're Israeli. You're not even from this country.
That's right.
You know? So how did you manage to do across the Atlantic, across the ocean, different mindset, different, how did you go about doing your first deal and raising capital for it?
Well, when I got here, I actually didn't know almost anybody besides my boyfriend at the time, that is now my husband, and his, immediate family. So I really started from nothing, from scratch. And 100% of my investors are non-Israeli. So most of them are Americans, even though I get calls from Spain, Japan, all across the globe. But it's a very good question. And part of it, I think it's also what Mike was talking about, is using the power of social media to extend your reach. So yeah, for my first deal, I had to rely on the people that I knew because I didn't have a solid online presence, and that changed. And Mike basically said you have to give some value first, and that's the first step in creating relationships and expanding your network. And that's basically what I did. So the first step, I had my own website, and I'm telling my story. And that makes people comfortable investing with me because they feel that they know me. Because, I'm in LA. I would say 40% of my investors are from Southern California, but most of them I haven't even seen or met in person. And by talking about yourself, who you are, and putting it on social media, that really helps people feel that connection with you. So I have a lot of investors that are doctors or lawyers because they connect to that side, because of my legal background. And so that's kind of part of, you got to understand who you are, what you stand for, and emphasize that on social media. And in addition, I have a weekly blog and a podcast, and I share a lot of information about multifamily investing. And I hear it a lot from people who are just starting. They basically say, I'm not an expert. I don't feel comfortable writing, having a blog and managing a blog and writing about multifamily syndications or about investing in multifamily because I'm not a huge expert. I'm just starting out, which is true. But you have to understand that even when you're starting out and you're reading books, you're educating yourself, you know more than the average person out there, the average passive investor. And there's always something you can teach them, even as simple as how do you calculate a purchase price? How do you, increase NOI? How do you underwrite deals? How do you shop for deals? How do you analyze markets? All that, and most people don't. So share that information and don't expect to get anything in return. Just enjoy sharing and helping others, and that will come to you. And investors will come to you. So the first deal that I did was the only deal that I was actually actively looking for investors. And since then, I kind of switched with social media. I switched the model, and now investors are reaching out to me. So when you have a website, and I use Wix, it's kind of easy if you're not a coder. Just have a place where people can add their information and send you a request to talk with you about investing. That can really help you expand your network. And that's what I did, and that's how I've built my network, coming to America with, not knowing almost anybody, and it just works.
So, guys, what I'm hearing from everyone is that this is a relationship business. The secret sauce that I'm getting from everyone is relationships. It takes time, and start with a live deal, but also start before you even have that live deal, right? Start talking to people, start sharing, right? These are the kind of tips that I'm getting. So, Marjeanne, what about you? How did you go about raising capital for your first deal?
We did it the wrong way entirely, and I would never recommend doing it our way. We had a deal before we ever really even knew anybody that would invest in it, right? And so that was a lot of boots on the ground. I have a box that's about 18 inches by about 36 inches wide, and it's completely full from 1 year of just talking to people and meeting new people. But you're absolutely right, Ellie. Posting informational pieces on social media. If you're just now getting into it, that's okay. Tell people, hey, I'm getting into multifamily. What questions would you ask? Get people engaged in there from the very, very get-go. People need to see what you're doing. It instantly starts to build that credibility. The other thing Mike touched base on is follow-up, right? The fortune is always in the follow-up. I've spent 20 years in sales. So if you meet one person, you need to be following up with them, right? Have your preloaded, pre-qualified questions ready to go on exactly what you need to know about that person to see if they're going to be a viable investor or not. And if they are, you need to follow up with them. I have a follow-up schedule that's usually once a week. And then once a quarter, we have a longer conversation, right? So really taking the time to get to know people. You're absolutely right. This is a relationship business. And you would actually be surprised if you talk to your internal network, your family and friends, who actually has some kind of knowledge in this and or has been considering investing, right? So start there, start with social media, just start letting people know what you're doing. And then when you do have a live deal, absolutely start calling them and talking to them about it. They may not be interested at that point, but it's no harm in asking, hey, if I can prove myself, would you be interested in investing in the future? And that's how you just keep building it.
Marjeanne, is there an app or software, or what's your system for keeping track of your investors and following up?
I like Active Campaign.
Okay.
I like it because it's a good CRM. It's not super expensive. Their average cost is about $50 a month, but you can set up automation pieces on the back end. So as soon as you put someone in there, you can set a drip campaign for them to get the educational information Mike is talking about, right? So they're getting contact from you every single week or every 3 days, however you want to set it up to be. And then you can tag people in there, right? So if I met somebody at like Dave Lindahl's group, I'm going to tag it in there as Lindahl's group. So that way, when I call you, we have something to talk about. I'm not going, yeah, who are you again? Where did we meet? What are your insights? Like, take as much notes as you possibly can. No matter what CRM you use, there's a lot of good ones out there. HubSpot, Salesforce, SharpSpring are all good ones. I would recommend paying at least $50 for a CRM. The free ones are exactly that. They're free. They don't do nearly as much, just like everything else in life. But no matter what CRM you use, you can even use Excel, really, but keep really, really good notes because people like it when you remember things about them.
Absolutely. That's awesome. Yes. Guys, I know that when I go to different networking events and whatnot, I'll write the on the back of the person's card the event that I was at and a couple of notes, if they had kids, if they are married, where they're living, what they used to do before, so that when I call them, I have notes on what we talked about. So it shows them also that I was paying attention, and people like that. So guys, how should people, we mentioned a little bit of, I think Ellie mentioned it as well, and whatnot, is the credibility. I was a newbie getting started in multifamily. We're all newbies getting started. So how important is credibility, and how, as a newbie, do you gain credibility quickly? Anybody, feel free to shout out.
I'll grab that one. It's on. So I wanted to first point out that there's two good books out there. One is called The Apartment Syndication Guide. Joe Fairless has a really good book out there that's really impressive. The other one is called Raising Private Capital, and that's by Bigger Pockets. And so that might be a good resource for Nitsan for your listeners to jump into. And then I just wanted to just tag on to the previous thing that you were talking about. I have a buzzword, man. Rich uncles. Talk to your family. Right? So, and you'll be surprised how much money is surrounding you. You don't even realize it. You have doctors. When you go to your doctor or your dentist or your lawyers, casual conversation can lead to the coffee conversation that Mike alluded to, which can lead to eventually them saying, hey, you know what? Let me know when your next deal is. And that's all it takes. I've heard stories of where people are on an airline and then they're talking to the pilot, and randomly the pilot sends them an email the next day saying, hey, sign me up for your deal. So it's amazing how much money that is surrounding us that we don't even realize. And so and
that's true.
Technology resource, I use Asana to try to track all my contacts, people who could possibly raise money with me, people who are potential JV partners, people who are investors. And so that's another resource and it's there's a free version of Asana that's very powerful. But again, back to your original question, Nitsan, which is, hey, how do I get credibility? Look, no one knows me. No one knows what I do. I'm just getting started, right? And so remember, everyone who's a master was once a disaster. So we were all beginners. So the way I got credibility is what I latched onto people who are already doing this. They're already in the business. And so what we did was, hey, look, how can we help you guys? And then when I was speaking to my investor groups, I would be like, yeah, my partners and I, we've done 4 or 5 transactions together. They're like, oh, who are your partners? Well, it's myself. Here's my SEC attorney. And then this is my JV group that I'm with. And so that lends you, support and sort of authority. The other thing is they're like, oh, are you guys going to change the toilets? What's going on here? No, we use a professional third-party property management team, and this is how we do it. And, we're structuring the deals in such a way. And, when you speak with authority, you get credibility from sort of your team, and you're very authentic in how you're trying to relate that to them, and you're very as transparent as possible, but you're also speaking with confidence. I think, you'll get people to move forward with you.
Okay, so I'm gonna pose the worst case scenario for a newbie. Okay, so the worst case scenario for a newbie is they've never bought a house, they've never lived in a house, they've been renting their entire life, they don't know they don't have any rich uncles, right? They don't know anybody who has money. What would you tell them? What would be the first thing for them to go out and to raise capital, so to speak?
So I can take this one.
Go for it.
Yeah, I can take this one, especially my background. I came from a very my beginning was very humble, and so I don't have a rich uncle actually. But like I said before, if you use social media, it's a very, very powerful tool, and over time, you can attract investors to you if they see that you're authentic, if you share your story, if you share your thoughts, if you add value to them. You can do something simple as creating a free guide. On my website, you have a free guide, the 5 critical deal components that every passive investor should look into. This is a great way to start, to tap into a bigger audience and people that you don't really know. So it's not about who it's how well you can use, to some extent, how well you can use social media. For me, I found that going to conferences it took a lot of time, energy, money, and I didn't, I got maybe, a handful of really good connections. But if I spend that time writing and adding value, I got a lot more leads that turn into active investors. So that's kind of the way, if you use social media, and I know we're kind of, repeating that over and over again, but there's a reason, and the reason is that it actually works. The key is to be consistent and to not expect anything in return. Just give people information, share with them whatever you know, and that's how you can basically start. It's only a matter of time until people start reaching out to you on a regular basis. So from my experience, it can take 3 to 6 months. As long as you keep it consistent, as you have for us, for instance, we have a daily kind of a schedule, and we have a weekly schedule and a monthly schedule. We know every day, we know exactly what we're putting out there. We're either sharing a blog, a podcast, an interesting read, and we keep, engaging our audience. And that's how we're kind of opening up the, you're able to reach out to people that you don't even know. So your family, your friends, it's nice if they invest with you, but in order to scale and grow, you really need to step up your game and be able to attract other people, not necessarily people that you know.
Right. That's awesome. That's awesome. Social media. Yeah. Social media is fantastic. I use social media constantly. I'm doing it now. Right. And it's all, how do you add value through social media? One way is you create a show like this and you bring people on so that they get FaceTime, they get more popularity. People get to see them as well. So I'm adding value to you guys by having this conference and this panel, and vice versa. Now, Mike, let me ask you something. You've been sitting there nice and quietly. Oh, and by the way, Mike, thank you for that bottle of whiskey. I have about that much left. So, and I keep looking at the mailbox and I don't see another one there. So, but let me ask you something, Mike. You've got out and you've raised over what, $650 million, you said? Or you have $650 million of assets?
Of assets, yeah.
Of assets. Okay, so, going out and each one was a different raise. Each one was a different, I would say, direction with your investors. Do you constantly go out and find new investors? When does someone say, I have enough investors, I don't need to go out anymore? And I know you like to communicate with your investors as well. How often do you communicate? How do you communicate? What's your method?
Yeah, I think you never have enough investors, right? It's the chicken and the egg. You always need a deal, and you always need your investors, and you can never stop cultivating both. They're equally important. So again, you can never stop marketing. I think Ellie's all over that, obviously. But for us, for the most part, once you get it going, most of our investor growth it's really word of mouth. We don't use any crowdfunding platforms. I'm not the best with social media. Although during this slow time over the last couple of months, we've been a little bit more active than normal. But most of our growth has come from a happy investor over here that refers, 2 or 3 people over here. And again, I think the most important thing to realize is you take it in small chunks. As I said earlier, it's really one deal at a time that grows. Your network starts with one person that you were able to impress and educate. And that's not always the person that invests. I think that's one really important thing for people to remember, that, you're always trying to get investors, but, take a step back, educate, create the relationship. Most of the time, it's not that person you think that invests. It's someone that they refer you to. I didn't have a rich uncle, but you can find someone networking and maybe they have a rich uncle. And by impressing them, educating them, they're going to open up their relationships to you. That's a great way to start raising capital. Another thing with me is I was never that comfortable fundraising with family or with friends. Most of my investors are people that I really didn't know, but they were interested in the knowledge that came with multifamily. I keep saying, why multifamily? Why now? And the returns that it presented more than anything else.
Awesome. That's fantastic. So you never stop looking for investors, and travelers, you guys listening out there, when you go into a store, right? The store makes money from their client. When you shop from online, right? We are the client, the shopper, the person buying, spending money. In multifamily, our clients are our investors. And it's always more, the most expensive client is always the new client, because you have to spend money getting to them, right? Or time, whether it's social media, whether it's paid advertising, whatever it is, it's that time or money that you have to invest to cultivate that one client. And it's a lot easier to maintain that client and to have that client go out and bring referrals, right? Referrals are the best way to get new clients, and that's what I hear a lot from everybody on the panel today. Marjeanne, what do you what's your, when you're going out there, how important is it to have a pitch deck when you're raising capital? Oop. Oh, we got somebody's car is going off here.
That's
All
okay.
right.
That's the beauty of live events, right?
Exactly. That's what happens when you're in the middle of the woods and a tree falls on your car. All right.
Exactly. So I guess the answer to that question really is it depends. It depends on where you're going and who you intend on meeting, right? So I'm a big believer in strategic networking. I also 100% agree with Ellie that you should be doing social media, and you should actually be having things like podcasts or panels or those types of things where you're involving other expert people so that the investors can see it's not just you, you're actually involving yourself with other higher level of expertise, right? But if you're going to, let's say, a women's group that's an affluent women's group, you're not going to go with a pitch deck, right? It just wouldn't make sense because it's not the time or place for that. That's where you make that connection and then you do your follow up, have coffee with them. And that would be an appropriate time to bring a pitch deck to them. However, if you're going to some of these conferences, especially with some of these bigger guys, people expect to see pitch decks, especially if you do have a live deal, like Mike said. So you should absolutely, if you have a live deal, or if you're considering JV partnering with someone, even if you're just looking at something, that's a good opportunity for you to show people what you're looking at, what you look for, how your brain works, and what kind of level of integrity you have when approaching different deals, right? So again, it just really depends upon the setting. Use your best judgment in that one.
Awesome. All right, guys, I know we've been on for about an hour now. So one last question, okay? Do you use webinars to raise capital, and how? Let's start with Ellie. Quick 30 seconds.
Sure. So we use a platform called Free, what was the name? Free Conference Call. I believe that's the name, and it's completely free. And so whenever we have a deal, we send an email to investors with a link to that conference call, what you call a webinar. And it's really important because when someone reads a pitch deck versus hearing you, seeing your face, hearing how excited you are about the deal, and allowing also people to and investors to ask questions live, that makes all the difference in the world. And in addition, you can send them the recorded conference call or webinar, so investors that didn't have the chance to be there can listen to it, and that really, really helps to scale your capital raising abilities.
Awesome. Thank you. Marjeanne.
100% agree with Ellie, only I use Zoom. I've tried many different platforms, and Zoom is my favorite for webinars. It also allows people to ask their questions in real time. So other investors that are maybe thinking or too shy to ask or feel like it's a dumb question or whatever, they can hear the answers as well as how you respond to them. So it's a way to talk to investors about your deal in mass. So you reduce your amount of time talking, you reduce the amount of things you're saying over and over again. And exactly like what Ellie said, then you can send it out to the rest of your investors who may have missed that webinar, and it exponentially grows the attraction for the investors to your company.
Awesome. Thank you. Michael.
Yeah, I actually don't do webinars. We thought about it at some point in time. Maybe we're old school that way, but it started with just sending out an email with the highlights of the deal along with a PDF of the investment summary. It's kind of morphed into a larger blast to 1,000 plus people through MailChimp, where you can track their clicks. Do they click onto the website? Do they click onto the investment summary? How long are they on that document? And then for me, it's just a lot of personal relationships. I like to be on the phone with every investor that has interest, and I kind of dig in that way more than the webinars. But hey, they all work.
Absolutely, right. And that's why we have everybody from different backgrounds and different ideas so that the travelers out there, wherever they're listening in from, can see that there isn't just one way of doing it. There's multiple ways, and you got to find what works for you. Within that, these are systems that work, right? Awesome. And Dr. Vic, how about you?
Yeah, I actually went live on Tuesday for, we have a deal in DC, Nissan, and we are raising capital for it. And so we did a webinar about 2 weeks ago when we initially released the deal. And then we found out all this amazing new information about the deal. And so we did another sort of follow-up webinar on Tuesday, and investors love it. We usually get a spike in commitments right after we do one of these webinars. But I also like going old school with my friend Mike Flaherty here. So nothing beats getting on the phone one-on-one and really, massaging and talking to these investors and really making them feel comfortable with you, your company, and your strategy.
Absolutely. And I watched a little clip, a video clip yesterday, and I guess it was from a movie, one of these stock movies, stockbrokers and whatnot. And the guy walks into the morning meeting and he goes, "You guys, you need to sell, sell, sell. If that person on the other line convinces you not to, take their order, they just sold you." He goes, "There's two people on the phone. One person's going to sell. Either you are going to sell them, or they're going to sell you that they're not going to buy. Who's it, right?" So it's always getting on the phone and making sure that you can communicate in the way that your investor wants to be communicated, right? All right, I know I said one last question, but this is going to be the last question. How are you guys, have you shifted your raising techniques during this COVID situation, right? Have you heard anything from your investors that's saying, "Oh my God, what are you thinking? Not now, call me later." What have you seen? Anyone?
Yeah, so I could take that one. At the beginning, I would say maybe 2 months ago, we understood that there was kind of a decline in demand for deals because people were a little bit scared, they were unsure. And now we actually see more and more investors that reach out and say, "Hey, do you have a deal? We actually want to invest." And so what we did, we called our active investors on other deals and got on the phone with them to walk them through what we see in the market, what's going on with their properties, what's going on with collections. And while having the conversation, I basically asked, "If I have a new deal, would you be interested in investing?" And that's a really good indicator for you. You want to get the next deal, but if you're unsure how much, if you can raise, we can actually, just use direct communication with investors. And they are really, really appreciative of not just getting another email. Everyone sends emails and we also send emails, but getting on the phone, asking how you're doing, is your family okay? Just wanted to make sure that we're here for you. And if you have any questions, and then at the same time, talk about the potential next deal. That's something we did a bit differently than in other times. But in terms of the strategy as a whole, it's pretty much the same. And the one thing that we did tweak, which is extremely important, though, it's not in the strategy, but in the way that we approach it, is basically adjust investors' expectations. So if somebody is expecting 15 to 17% IRR or 8 to 9% cash on cash, like we've been, finding those deals pre-COVID, engaging with them early and say, "Hey, this is not the type of deal we see anymore, and this is why." That helps adjust their expectations. So when you do have a deal, they already know that they shouldn't be expecting the same returns as pre-COVID, and that really helps with future capital raises.
Right. I guess it goes back to the constant communication, right, with the investors.
Absolutely.
Right. How about you guys? Anybody else?
Yeah, I've been using this time to reach out to all my investors with personal phone calls and scheduling calls. It's a great time to get back in front of your network from a one-on-one standpoint. I've received just a ton of investor interest through these calls. When's the next deal? We're ready. And we're closing a large deal in Dallas right now. When we went out and saw it, we changed our strategy. We found out we could actually accelerate value add quicker than we initially thought. So we had to raise another $3 million. In this environment, we were really nervous about it. My partner on the plane back literally shot an email out to the network. By the time he landed, we had commitments of about 6 million.
Wow.
So we were really shocked at that, because in this environment, we weren't sure we could raise 700,000, 500,000, a million. But we've been pleasantly surprised where investors really believe in what we're doing from a track record standpoint. They still believe in multifamily. It's a very stable place to be. Workforce housing in this environment, as volatile as it is, people still need a smart, safe, updated place to live. And you still have investors with very interested capital out there. It's very different from 2008, where there was no debt and there was no equity to invest. Right now, you still have great debt scenarios. As Nitan, as you mentioned earlier, we're refinancing 5 deals and returning about 25 million back to investors. But it's just so different, where investors are still out there, they're still liquid, and they're still looking for smart, safe opportunities.
Awesome. Thank you. How about you, Marjeanne?
It's been actually quite shocking to me. When everything happened, I didn't have any deals in the works, so I just kind of went quiet. And one by one, investors have started calling me. Well, within the last, I'd say, week and a half, calling and saying, do you have any deals? We're ready to invest. What can we invest in? So right now, I have a great problem. I have more investors than I have deals. So anybody wants a JV? I'm going to throw that out there right now. But it's been, like Mike said, it's been a really cool scenario, because the prices haven't tanked and there's tons of mortgage options out there. So I think we're really headed towards a very, very good thing this year. I think we're going to close out 2020 with some power in there. So that'll be cool.
Awesome. Thank you. Dr. Vic.
Yeah,
how about you?
Absolutely. I think I'm like most of you guys, we're all pleasantly surprised that investors are still alive. They're still kicking. They still want some action. And so, it's our goal to deliver it. So we have this live deal that's going on. And so, initially I was very concerned about the ability to raise capital. And I was worried, to be honest with you. But when we put the deal out there and we're getting the responses back, the capital is starting to come in. And it is a little bit different, though. I have to be honest, Nitsan. It's not like pre-COVID, where we blasted some emails out and, a couple of weeks we're done with the raise. It's been a little bit more, webinars and talking and phone calls and just reassuring folks, and then giving them more updates. For example, I'm giving them April collections and May collections and letting them know that the property is still performing. And hey, look, if it doesn't perform, I'm going to probably, retrade with the seller and make sure that we're getting a fair price for this deal. But, these are the kind of things that are a little bit different, but otherwise I think it's still business as usual.
Awesome, guys. So, just to recap, right? We talked about, starting out as a newbie, right? We talked about getting educated, learning the lingo, building relationships, right? Starting off small, right? Not going out and raising, $5 million, but maybe raising, $100, $500, $700,000. Social media, using social media to, get your reach out there. But the one thing that I've heard all of you talk about was that relationship and credibility. And if you don't have that credibility, then you should partner up with someone who's got the credibility, right? Going out and networking with people and whatnot. Can anybody else come up with a last item that they want to share that we haven't really talked about, that you think, wow, this is something that we can really, that travelers can really use out there?
Use social media. Ellie and I have just kind of really expanded on that, but she's right. It's a really incredibly fast way to grow that credibility, to grow those relationships. Use social media. Don't be afraid of it. People are always afraid of getting on video. Nobody cares what you look like. Just get on, and unless your technology doesn't work, of course.
All right, we'll have to do it again and make sure that your camera's working, Marjeanne.
It works for everything else, of course, except for today.
Right. Of course. That's how it is, right? Well, Ellie, Michael, Marjeanne, Dr. Vic, thank you so much for being on the call. I know you guys are super busy and, taking time out of your busy schedules to educating newbies out there that are following in your footsteps. So I want to personally thank you, and I'm going to reach out to each one of you personally to have a conversation, a phone conversation, as many of you have put it. But I want to thank you so much for being here, and let me know if there's anything I can do for you guys to add value to you. And travelers, you know, go out there, get educated, but take massive action. There's nothing more important than taking massive action. Would you guys agree? Right? It's all about taking
Absolutely.
massive action. We're going to make mistakes. We're going to screw it up. It's okay. As long as you've got people like Ellie, Mike, Marjeanne, and Dr. Vic on your team, you're going to do okay. One other thing I want to mention tonight at 5 p.m. Eastern Time on W4CY.com, I'm going to be doing my live radio show, and we're going to be talking about mindset and more about what we're doing here. So go to W4CY Radio on W4CY.com. You can click on Talk 4 TV, and you'll get to see my beautiful face again at 5 p.m. Eastern. So, guys, take care. I'll see you soon. Travel well and travel safe. Be well, my friends. Take care. Thanks for being here.
Thank you.